here with the Traders Club. Welcome to the market update. I am recording this intraday, so market should be open another 2 hours and a half as I record this video, so you should be seeing some flashing lights on your left. Let's continue with our analysis here. Let's follow up from the last week's analysis. We'll deal with the spider today, diamond, Qs, IWM, semi, and the banks, and we'll call it a day. Let's kind of talk about what happened here today, this week. We are seeing market pulling back, so let's do a little bit of maintenance on our charts here. Let's put this up to 280, and you can see that we're clearly see that we've been pulling back. We're actually down 3.25% since the March highs right here, right, 280s. And then what we saw was there was this gap. You see this that little box that was annotating there was a gap. We filled that gap yesterday, and then we gapped down a little bit. Now we're retesting where? This island reversal. The green box represents island reversal. What I mean by island, it was a gap down there. Here, zoom in here. You see this gap down, right? And then we gapped up in like 3 days later, so that this 3-day thing became an island. That's what island reversal means. And so we can put that there, so you can see that. We also have another island here. That's another island reversal. Then we got a big gap down here, 245s. But so bears did fill some gaps, at least one gap here, right? And then bears did open this downside gap today, right? And there's a tiny gap here, just really tiny. Let's not worry about that. Such a small gap, it's not going to be much. But we got this down gap from today, and that gap is still open. So let me, you know what I'm going to do? I'm going to actually adjust my 50 a little bit to setting at close. The reason I did that, so I can it can accommodate this price section right here. You see this price section, because that was a crucial point, right? I think there's a lot of bears who are thinking that was a prior resistance or prior support potentially becoming what? New resistance. So I think the 260 was that anticipated 263, right? 263, 264 was one of the kind of more anticipated resistance. And then there are a lot of gap ups, gap downs, gap up, gap downs. We stayed here for 1, 2, 3, 4, 5, about 2 weeks. We built a small base, finally gapping back up, because you remember gapped up, gap down, gapped up, gap down. Remember that? And then we got them. And that whole time when we're doing that, the 50 EMA was supporting the buyers here, and then finally got up. So that 50 is quite important at this point. You know what I'm going to do so that we don't make that? Let's get rid of 10 and 20s. So we can kind of get rid of the little bit of a, we can clean this up a little bit. So 50 is here. That's the 50. 50 that has been acting as support all rounded in late January. And so we're now retesting the gap area, which is important, right? And then near the 50 EMA. We're not quite there yet, but if the bears come and fill this gap next week, then we're probably going to meet with that 50, and that's going to at least provide short-term support, right? And that short-term could lead to a little bit longer-term later, but for now, that is kind of a pivotal level there, right? So I think we pretty much coming straight down here, 1, 2, 3, 4, 5 straight down days this week. And not too bad, obviously, given the fact that, you know, market moved about 20%, pulling back about 3.25. It's not a huge deal at this point. And again, this is gonna be this. I mean, this is something that we've been talking about. This is the most anticipated resistance of the year. And 280, man, it is a resistance that everyone can see. I'm sure there will be some cocky bears probably went short right there because they saw that that was 280, and then they might even say, aha, making money is easy, right? And so this is one of those very, very prominent resistance, and a lot of people are going to be thinking that obviously that's a level, right? And this is where probably I don't watch TV, I don't watch CNBC, but I'm guessing that a lot of these major media sources, major publications talking about that 280 as a major resistance. What they don't realize is 280 is a good thing because we do not have lower highs any longer. You are no longer in a bearish territory, right? Bears, you got to watch out who you talk to like that right now because we now have cultivated equal highs. What does that mean? Well, downtrend consists of lower highs and lower lows, right? We don't have lower highs anymore. Now what you can say is we are neutral in the intermediate term. We're obviously bullish in the primary term, obviously bullish in a secular term, macro term, which I've demonstrated all of that in my long-term macro view video that I've done. In the short term, are we in a bullish? Yeah. We made 20% move, so that's a short-term bullish sentiment. Intermediate term, that's what you're looking at right here, right? This right here. We are neutral. Why? Because we now have cultivated equal highs. That's the first thing you see. So what do we need for the uptrend to be established in the intermediate term before we can categorize intermediate term sentiment or market trend as bullish? What do we need? And higher low and higher high. We didn't have that. Straight up move is really not a trend. It's just a V-shaped reversal. It taken place. V-shaped reversal took place because it was a recovery. It was a rescue mission, right? Bulls came and rescued everybody who was able to run through this up move. And now what we need is a cultivation after this rescue mission and a higher low. So the biggest question would be then, well, are we come all the way down to 260s on Spider and then we cultivate higher low? In that process, are we going to build this symmetrical inverted head and shoulders? Well, personally, I think that's too easy. Personally, I think that's what everybody's looking at. Personally, I think that's what everybody's talking about. And I do not like it. And market does not like it when everybody thinks they figured out the market. This market does not like it when CNBC start covering some technical douchebag comes out and say, you know what, this is an inverted head and shoulders, man, so this thing's gonna come down like this and then do that. Market does not like that a bit when you think you can somehow figure these little patterns out and then profit from it, especially when everybody else is talking the same thing. So I'm more in a camp that potentially we may not see a steeper pullback to 260. If we do see that 260, if we pull back that much, definitely that's the level I'll be accumulating more longs. But at this point, I'm wondering though if we're gonna see this vicinity right here. We got this gap. We already feel the first gap, and there's a chance we may feel this gap early next week, right? And I think if we do feel this island reversal next week, I think that level is going to act as a pretty strong support, at least in the minor term. And we'll have to follow up next Friday and see how it turned out, because that minor term support can turn into intermediate term run, right? So, and again, we got 50 MA there, 50 MA in that vicinity. We already feel this gap. So bears are slowing down a little bit because we feel that gap. Again, those gaps are a good thing because the gaps are deployed by the bulls just in case a price pull back, and those gaps could provide as a cushion, right? And we got another cushion for the bull, but this gap is not an ordinary gap. This is an island reversal. It has a little bit more thicker cushion there, especially at the same time we have a 50 EMA just residing in that vicinity. Another scenario, this gap is open. We got a little bit of, you know, spinning top doji type of deal here. If we see a gap up, right, above 275.50, right, 275.50, it could be Monday, Tuesday, Wednesday, I'm not sure. But let's say if we do see a gap up, if we do see a gap up, that would mean we're gonna have another island reversal. Let's say we see a gap up, this thing gets kind of an upper move like this, that's gonna turn into 3-day what? A morning star reversal with island reversal, right? So that could really bring up the price back up to 280, 281. If we see it, I'll tweet it out at my Twitter account at 2KKim. You can follow me there. I do post, you know, charts here and there. Not every day because, you know, I'm a position trader, active investor. I don't need to look at market every single day. But hey, when I deem necessary to alert you with some of the charts and some of the sentiments, I do that at 2KKim, so you can follow me there. So let's see what happens next week, and we'll go from there. Let's do diamond here. Diamond, pretty similar looking pattern there. We got the gap right there. We got the gap. So let's actually annotate that. So we got the gap area right here. That 252. You know what? I'm gonna actually clean this up a little bit. I don't like it too messy look in my chart right there. So we'll worry about this. This is actually an island too. Let's actually make this green, right? So that's an island. This we'll just keep it as it is for now. But we've started falling back at the what 262 level. We pulling back, and we feel this gap right there. And then now we're retesting what? The gap area, 252. But we are actually near 50 EMA on the Dow. You can see that 50 EMA right here. And that 50 EMA did act as support during this late January commotion. A lot of shenanigan up and down, gap up, gap downs. And then that's what 50 EMA was able to bring this price all the way back up to prior resistance. Again, what is that? Equal highs. We're no longer in a bearish territory. You have to watch who you talk to, bears, at this point, because we're no longer in your court anymore. We're now in the intermediate term, more of a neutral to bullish ground. 50 EMA was declining, as you can see there. 50 EMA is, you know, 50 EMA is rising, right? So you can see that we have more of a little bit more bullish sentiment in the minor to intermediate term. That gap area is retesting today. And then that's the level you can see potentially prior resistance acting as a new support, coinciding with the gap area and the 50 EMA at 250 to 250 area. So that's a level to watch next week. 252, 250 area for potential support. Let's go to Qs here. Qs, actually what happened on the Qs that we actually not completely filled. We're retesting the gap area today like that, right? 169, 167. 50 EMA residing in that vicinity as well. We saw a little bit of gap here, a little bit of gap there, but again, I mean, you know, bulls did a lot of work on the Qs as well, because a lot of gaps. There were gaps here, there were gaps here. It was all filled, these downside gaps, right? And that's why Qs are a little bit more lethargic versus other indices such as diamond. But it filled all those gaps. We got these two downside gaps needs to be filled. We're pulling back now. Needs to breathe a little bit for the bulls. Bulls made a really, really good move. How much move was it on the Qs since the December lows? 22.5% run since the December low. That's quite a run. Needs to pull back a little bit and retesting this gap area here, which is coinciding 50 EMA, which is the same story as kind of a spider, diamond, and Q. So let's go to Russell 2000. Russell 2000 is complete. Now it has reclaimed every single lower high. So you know this? This is a lower high. This is a lower high. This is a lower high. High, lower high, lower high. Has reclaimed all of those lower highs. We came to 158. This is a great work for the bulls, right? from the bulls, right? That's what? That is a 27%, 27% run since the December lows. We're pulling back to where? The 50. 50 acting as resistance, 50 acting as support. We're back at that 50 EMA level. And that process, we just feel this gap. It's a smaller gap. We feel that gap. Is it gonna come all the way to maybe 140? There's no gap here. I don't know why I did that. Is there? Let me go to my intraday. No, there's no gap. So let's get rid of that. Is it gonna come all the way to 145.54 on the Russell 2000? Possibly. If it does, I think that's a level to buy. I mean, it may come down a little lower just to shake some people out, you know what I mean? Do something like that, you know, which I talked about in the last week, potentially having a smaller inverted head and shoulders while we're having a bigger inverted and shoulder. That would be more complicated version if really market wants to bring it down. I can kind of see Russell doing it, doing maybe inverted head and shoulders. But if the S&P and the Dow and the Q start going back up, we're probably going to see the Russell following that footstep as well. So we'll keep an eye on it and follow them next week. Semiconductor. Well, semiconductor, I mean, you can see how we're starting to see market is respecting these levels like a clockwork, right? Prior resistance playing out there. And then prior resistance as potentially new support. We just fill this gap, and that gap is acting as support. When you start to see some of these indices respecting these recent pivot areas like this, you know that market is more in a docile condition, right? Because when the volatility hits, man, it doesn't matter where the support is, where the pivot is, it's going everywhere. But you kind of see what's going on right now, right? I mean, even some of these indices, I mean, you know, S&P, we go right to 280, start pulling back. Diamond, we go right to that recent high, pulling back. Russell 2000, we go right to that high, pulling back, right? And semiconductor, we go right here, pulling back. And where are we stopping? Well, right at prior resistance, which is coinciding with the 50 MA. This is dotted pink moving average there. When you start to see market is kind of start to respect these recent pivot areas in technical, when you're looking at things in technical aspect, you know that market is being a little bit more docile manner. That doesn't mean that we're not going to see some volatility, we're not going to see some shenanigan, but when you start to see that, that means slowly uptrend is getting established, and we're starting to see some internal establishment of this uptrend developing. Does that make sense? So that's kind of the first thing you see. Because, I mean, after some volatility shenanigan, it ain't going to respect any of the levels. It's going to go up and down everywhere. And then we slowly, as the market starts to bottom out and then starts to continue higher, it starts to respect these levels almost perfectly like this, right? That's when you know market is in more docile manner. Let's go to XLF here. XLF is a little bit more messier. And XLF is something I've been talking about. XLF is a little bit more a vulnerable look, but they do come later. Banks tend to come later, so we're still in a lower high stage. This is still in a intermediate term. I've categorized other indices intermediate term, neutral to potentially bullish. XLF, I still have to categorize the chart sentiment, the trend sentiment is bearish in the intermediate term because of these lower highs. You know what I mean? So it needs to at least get up to 270, 27, and 39 to start, you know what I mean, cultivating these equal highs to make this into a neutral condition. Right now, we're still in a bearish condition in the intermediate term, but we're kind of retesting this level here. We starting to make some this rising channel type of deal, but was not able to fill this gap too. We actually was not able to fill it and then start coming down. That's also a little bit more bearish as well. It would have been better if we filled that, because somebody didn't do their work. Because man, Q's did a lot of work. Spider did a lot of work. Diamond did a lot of work. Russell did a lot of work. Semi did a lot of work to fill those gaps, doing their duties for the bulls to get rid of those you know what I mean, get rid of those selling pressures from those downside gap. Well, the banks was not able to fill this gap. That's gonna make things a little bit hectic. And then we got this downside gap, this little tiny down gap. So that's also the little hecticness that potentially come. What we need to see on XLF is just some big thrusting bullish move to start the run, and then start getting up to 27 here. At least as a first step. But we got a lot of resistance because of these gaps. We got this downtrend resistance, horizontal resistance. Before this thing start really turn around, we need to get above at least 29. So we got a lot of work to do on XLF, but we'll continue to take it day by day, week by week, and we'll see how those things play out. One last look before I go again. As I finish this video, market should be open another hour and 20 minutes. So hour and 20 minutes, market should be open more. So you kind of get the idea there. So we're still now we're starting to see some this level getting protected at this point. So we may still see some shenanigan on Monday. We might see some gap down or flush to the downside, but I think 270, 270, even if this thing come down, fill that gap, I think it's going to provide as a support. What we don't want to see is this thing gapping down below 270 and turning this whole thing into an island. If we see that, that's gonna make things come down to probably 265. That will be the worst case scenario in the minor term. If we see this thing gapping down, making this a whole thing into an island, then we're probably gonna come down, retest 265, 263. If we don't see that, then there's a chance we bounce from here. So we'll follow up next week. We'll go from there. So you guys have a wonderful weekend, and good luck for the next week.